ICE Brent crude oil futures. An attempted bearish dark cloud cover pattern on Friday after the previous two sessions run up from the support of the 50% Fibonacci line of the April 2021 to March 2022 move at 77.54. Overall, the market is still within the April to date based bearish expanding wedge pattern, currently with the headlines currently at 74.45 to 83.25, and that's highlighted in dark blue. Overall, in early May, the market broke down below the bright red highlighted December 23 to late April 2024 lower bull channel line, currently at 87.19. And this gave some potentials below for this pattern. Thus, we had a primary target X down in the 78 even zone, with secondary hard to reach target X2 down in the 72.30 zone. Last week, target X was reached. Additionally, we had a mid-March to end of April head and shoulders top with a purple neckline, currently at 86.97. We'd previously reached down to the primary target in the 82.63 zone, and last week prices reached down to the harder to reach, not too many reaches going on here, harder to reach secondary target X1 down in the 79.41 zone. And so far today, a slightly lower open, but a pullback up towards last Friday's close. Spot gold, a huge key reversal down and bearish engulfing pattern on Friday. There was also a bearish long black Mariposa. The obvious point was that the market finally made up its mind about the breach dark blue highlighted lower time, currently at 23.77, the mid-March to very early April bullish shift pitchfork, and decided it didn't like running along the underside of this lower time. Prices punched out through the rising green highlighted short medium moving average, currently at 23.33, as well as the old 50% projected Fibonacci line at 23.01, closing below both. However, the bright red highlighted lower time, currently at 22.95, of the early October 2023 to mid-February 2024 bullish Andrews pitchfork, though breached, managed to hold up the market and effect a close right on it. Okay, so in recent days I looked at the action since mid-March as a possible bullish halfway hesitation, and even now we might still be in the process of forming the second leg of this pattern, giving a potential topside target up in the 25.40 area, well up off the top of my daily chart. However, I am mindful of the declines 3 weeks ago and again on Friday's big decline, and this idea of a possible bullish halfway hesitation is now looking like it might be a double or triple top instead, or some other bearish pattern. So whilst I'll keep the bullish halfway hesitation idea in there for now, I can also see alternatives. I will also add that the action over the last 4 weeks since the all-time high in May at 24.50 may be forming a possible bear flag type pattern. Enough that I've decided to lay out a possible target X down in the 22.60 zone. Just keep in mind for the false breaks if they should occur. Now, so far today, a higher open, but the market is seemingly content to stay either side of the bright red bullish lower time, and maybe just also stay capped by that 50% projected Fibonacci line at 23.01.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.